When we started off, early days, I still remember, the first, every single transaction we would know, and it was about convincing the customer, and so many people were like, are you for real? I mean, really, you're going to ship jewelry out? How are you going to do it? How is that going to happen? All of those questions used to come all the time to us. Now, of course, everyone's used to it, and you see things a lot more differently. We've clocked really high-value transactions. Every month we have 50 lakh rupee transaction happening without much of a problem. People pay us and do it because they see value in what they're buying, as opposed to what if they were going to buy the same thing offline.
Well, that was a very young Mitun Sacheti talking to us on Young Turks in 2012 about CaratLane's early days and his relentless pursuit of customers' trust. Cut to 2023, Sacheti has made history by making one of the most remarkable exits ever seen in the Indian consumer internet space. This feat was accomplished through the sale of his 27% stake to the Tata Group's watch and jewellery maker Titan for a whopping 4,621 crore rupees. That values the jewellery platform at 17,000 crores. Well, to give you a short history of CaratLane, in 2008, Mitun Sacheti co-founded the online jewellery retail platform alongside Srinivasa Gopalan. Embedded in Sacheti's journey is his family's connection to Mumbai's renowned jewellery establishment, the Jaipur Gems. In 2016, he scored Tata Group's entry into CaratLane as a shareholder, and this strategic maneuver followed a transaction where Titan acquired a 62% stake from New York-based investment giant Tiger Global, valuing the startup at 536 crores. Between 2016 and 2019, Titan bought shares of the omni-channel retailer in tranches, taking the total stake to a little over 72%, mainly through the secondary purchase from Tiger Global, the only venture investor in CaratLane. In 2018, after dinner with the legendary investor Rakesh Jhunjhunwala, Sacheti decided to buy out his co-founder Srinivasa Gopala and then double down on his business that helped CaratLane grow exponentially. Hello and welcome to this special edition of Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shereen Bhan, and before I bring Mithun into the conversation, let's hear out from Titan on the CaratLane acquisition.
We see from Titan point of view, it's a multi-decadal opportunity of value creation. And that is what the primary motivation for us to kind of increase our stake at this point of time. As far as this deal is concerned, our balance sheet is pretty healthy. We have a good cash position, but we are going to do part debt funding for this deal. And we are working towards that. And by the time deal comes to closure in next 2 months kind of horizon, we should be ready with our financing plan. CaratLane is largely diamond jewelry business. So the opportunity to keep inching up margin and gradually not only equal Titan jewelry portfolio margin, but be slightly better than that exists. We talk about that our jewelry business with respect to jewelry industry in India is current 7% market share and will go towards 10% by FY27. CaratLane similarly within Titan jewelry portfolio sits at about 6-7%, and they should go towards 10% by FY27. So certainly they need to grow, and in our expectation, they will continue to grow faster than rest of the portfolio.
So joining me now to talk about his journey and the road ahead is Mitun Sacheti, the founder and MD of CaratLane. Mitun, many thanks for joining us here on Young Turks, and congratulations on a deal that everyone is talking about. You know, we played out that clip of yours from 2012 when you were on Young Turks, Mitun, and you said the number one question that you were asked was, is this for real? And I guess post this acquisition done by Titan, the question everyone is asking, is this for real? But that's more to do with the valuation at which the deal has gotten done. Mitun, your first comments on how you feel today.
It's bittersweet. Ideally, if I could, I'm a kid of this industry and I'd love to build it for a very long time. And while the money is what the money is, and the money was anyways invested in the business the way I would think about it, but there could not be a better home than Titan for this. And the capital market speaks for that. The culture of Titan speaks for that. The Tata speak for that. And I'm happy for CaratLane that it's found its home. And I do believe that it's just, in the life cycle of jewelry businesses, which run about 100 to 300 years, it's only 15 years old. So there's a massive headway from this point on.
Yeah, you said that this is the best home that CaratLane could have found for itself. But what about the timing of the exit, Mithun? And, I would imagine that it would have been an inevitability considering the fact that Titan already held 72% starting its first investment in the company in 2016. But why now?
Rakesh and me would speak about this often, about both timing as well as value. My intent would have been to drive it so fast and so high that someday the dynamics play out in such a manner that we go to an IPO and that sort of solves it. But it didn't happen. They had an option and they chose to exercise the option, and that's why now. No other reason, because I think in their minds they're also clear if they don't want to take it to an IPO, then this is just going to get more and more expensive as time goes by. It's been on a 50% plus CAGR. It's profitable. In some of parts, it shows a lot more value as well. So I understand the reasoning for the decision which they made, but I'm grateful to the partnership I've had with them. They've been an excellent partner, and sometimes in partnerships, you got to give way to your partners just because it's the right thing to do, and there's no point creating friction around it.
No, I understand that, but that's what I want to understand from you, because I think that this is a dilemma that many founders will face or perhaps are grappling with even today. How do you decide when to sort of pull back, how much to pull back? And I would imagine that you were preparing yourself for this moment starting 2016. Take me through what that's been like, this process of detaching yourself from something that you created.
Shereen, I can never detach from myself from CaratLane. I don't think it'll ever happen. The process, though, to be honest, only in 2020 I started thinking about that. While we did have a put and call option in place, but that was more for an eventuality in case we don't get along and we're not happy with each other or something like that. But and there was always a possibility that maybe we could do an IPO. And then when that possibility became bleak is when the other conversations around it started, that maybe then it comes. Then it becomes about timing and everything else. And I have had such an unbelievable relationship with Bhaskar and with the support of Rakesh, who's been their large shareholder as well, and a good mentor to me to think about it. The three of us sort of got a good sense of it. And then along with that, Mr. Tata and Venkat all got together and sort of decided that now might be the time for it.
So, Mithun, as you pointed out, that this became a reality, so to speak, in 2020 with the possibility of CaratLane IPOing becoming bleaker. Why was that the case? I mean, we just heard from the Titan management as well that they're not looking at an IPO. But is that a regret that you have? Would you have liked to see CaratLane IPO? And why was that the final consideration on the part of Titan and the Tatas?
Yes, of course. Like any founder, it's the Oscar for us, right? We would love to see the IPO. There's no doubt in my mind about that. But I understand from their viewpoint, they don't want to have two listed businesses in the jewelry space with two different sets of shareholders. I think it's going to create a lot of conflict for them, and managing that might become more challenging as well also. So while the brands are very distinguished, Tanishq and CaratLane, but I do feel that it could become increasingly painful for them to manage that. And so from that perspective, they're very clear that, and Tata Group overall also has a strategy where they want to consolidate more. And many things were sort of roadblocks in making this decision happen.
But Mithun, I want to go back to building out. And your strategy to building out was also very different in the last few years from the time that you decided to start up in 2008, and largely led by the conversations that you had with Rakesh Jhunjhunwala, someone you've referenced several times in the course of this conversation as well. And, Rakesh was very clear, I'm not interested or invested in loss-making companies. And that, in a way, also changed your approach to how you were going to build this business out, didn't it?
100%. So, I had a chance meeting with him. I requested for a time with him through through his niece, and I went to see him in Bombay. And I couldn't hold his attention for like 30 seconds. It was after market hours, and right through that, I couldn't hold his attention because he had this strong view that loss-making businesses like us don't deserve the value that we were getting. And Titan was acquiring while he respects, and he knows that Bhaskar's a visionary and it'll play out, but he was not happy with me for building a loss-making business. That relationship evolved as time went by, And in 2018, when I tried to raise about 100 crores, which is the only primary capital that Titan put in, I was a little disappointed with the value at that point. I went to him and said, look, I don't know what am I doing? And I don't know what am I doing right. And he, along with a couple of other people, friends of his were over that day. He had, I think he had Ramdev Agarwal and he had Ramesh Damani and Utpal Sheth who were there. All of them spoke about compounding, and they spoke about what is the right way to compound. And while they were speaking about these things, not directly to me, I took that to heart. And I realized that my biggest gap was that I obsessed too much about my P&L. And I've had very low obsession on my cash flow. And the reason most of us have very low obsession about our cash flow is we'll keep looking at our VCs for funding us. When you decide that you're never going to have money, that you're never going to raise money, and your business has to fund you, you redo and you sort of rework your cash flow situation. And that sort of was a big turning point for me. And the buzzword of cash flow caught on to me at that point. And everybody in CaratLane will tell you we talk about it all the time now. We run sessions for people across who understand how cash impacts the business. And the P&L actually is just a report card. Everything else that we do is basis of cash. And that changed our trajectory, the way we opened. We opened 20 stores a year because that's all the cash we had. And last year we opened 80 because we had that much more cash coming. We went into franchising, which Titan was best at, and we learned from them, and we sort of built it even one step further than that. We went to our vendors and worked on that differently as well. So cash became king for us, and cash led to profitability. But all of this started with those conversations.
That's a very important lesson that you learned in your journey. And I think that a lot of D2C founders and startup founders are learning, perhaps in a difficult way at this point in time. But it's an important lesson. Be obsessed not just with P&L, but be obsessed with cash flow. And on that, I want to talk to you about some of the other important realizations along the way, Mithun. And, what we're seeing at this point in time, as you said, the ecosystem has gotten used to the fact that there was this easy money that was available because interest rates in the US were at 0 for the longest time. And now with rates at 6%, there is no easy money coming your way. So, I remember a CEO telling me once that you can't just have an approach where you save yourself out of trouble. You have to sell yourself out of trouble. So what have been the other realizations on dealing with the changes that we are now seeing, whether, you talk about funding or valuations?
I think everybody is realizing that right now. And I think the best capital, which teaches you that early enough, is Indian capital. Because capital cost in India is always going to be high. And the questions they'll ask are also going to be very different as well. The capital that comes from abroad oftentimes doesn't have a landscape view of what is going on in India, and which is why we are building with the wrong advice many times. I'll give you my own example. With Tiger Global, when we were there, they never said that. But we were looking to compete with the other portfolio companies. And we were trying to figure out growth, looking to compete with Myntra or, definitely not Flipkart. They were way too large and growing too fast. But the other portfolio companies which were there. And we were not a horizontal play. We were a vertical play. And we are a slow vertical play. We had to understand that it's going to take longer to build our business as opposed to somebody else's. So, frankly, that 400 crores that we totally took in as primary capital, and 300 out of that from Tiger, 150 we could have done without spending that had we just been smarter. And I think that realization now is coming to everybody. These conversations are happening everywhere, and the ease of money going away is actually a great thing for entrepreneurship. People are going to build a lot more meaningful businesses because the froth is gone. And the thing about money is it's also, while it's life's biggest luxury, it's also life's biggest corrupting agent.